Insurance secrets they don't want you to know. Ever feel like you're throwing money into a black hole with your insurance? What if I told you there are secrets insurance companies don't want you to know? Secrets that could save you thousands. Imagine this: you're drowning in bills, stressed about every unexpected expense. You're paying those insurance premiums every month, hoping you're covered. Then disaster strikes. A car accident, a flooded basement, a medical emergency. You file a claim only to be met with confusing jargon and a denied claim. You're left wondering, what was the point of paying all that money? This video is here to make sure that never happens to you. Insurance isn't just about you, it's about everyone. Think of it like a giant potluck dinner where everyone brings a dish. Your premiums are your contribution to the pot. When someone experiences a loss, they're essentially withdrawing from that shared pool. The more people contributing to the pool, the more stable it is. A large customer base is crucial for an insurance company's ability to pay out claims. Indemnity is a fancy word for a simple concept, putting you back where you were before the loss. Insurance isn't a lottery ticket. It's not about profiting from misfortune. If your car is totaled, insurance will provide a similar vehicle, not necessarily a brand new luxury model. It's about restoring your financial position, not improving it. Understanding this principle helps manage expectations. You're not getting rich, you're getting whole again. Insurance is built on trust and honesty. Both you and the insurance company must act in utmost good faith. This means being transparent and disclosing all relevant information. Hiding details or misrepresenting facts can have serious consequences. Failing to disclose information can lead to denied claims or even legal trouble. Honesty is always the best policy. You can only insure something if you have a financial stake in it. This is called insurable interest. You can't insure your neighbor's house just because you like the color. You must have a legitimate financial interest in what's being insured. This prevents fraud and ensures that insurance is used for its intended purpose, protecting against genuine financial loss. Subrogation is when your insurance company recovers payouts from the responsible party. Imagine you're in a car accident caused by someone else. Your insurance company pays for your damages, then pursues the at-fault driver's insurance to recoup those costs. This benefits everyone. By recovering payouts, insurance companies can keep premiums down. It's a way of holding responsible parties accountable and maintaining a fair system. So, there you have it. The 5 key characteristics of insurance: risk pooling, indemnity, utmost good faith, insurable interest, and subrogation. Understanding these principles empowers you to make informed decisions about your insurance coverage. It helps you protect yourself from financial disaster. Ready to take control of your insurance and protect your finances? Download our free cheat sheet, Insurance 101, using the link in the description below. Don't forget to like this video if you found it helpful, subscribe for more valuable content, and leave a comment sharing your biggest insurance takeaway. Stay informed, stay protected, and we'll see you in the next video.